Let's consider what could happen if demand for U.S. Treasury bonds collapses, especially if actions by Trump shake global confidence and nations pull back from buying U.S. debt. A sharp drop in demand would send bond prices plummeting, eroding the value of assets held by financial institutions and sparking a new wave of stress across the sector. In SFA, we don't want to see hardworking people lose their life savings, especially retirees or those nearing retirement, many of whom rely on financial stocks or long-term bonds. That's why it's so important to go beyond simply chasing dividend income. We need to understand the structure of the assets we invest in and the hidden risks quietly building up. Let me be clear. For 40 years until about 2020, buying and holding dividend stocks worked. It was a safe and reliable strategy. But since 2020, that strategy has failed. We're now facing challenges unlike anything in the past 50 or 60 years. Think about it. Have we ever faced a U.S. president like Trump in the last half-century? Have we experienced a conflict as disruptive as the Russia-Ukraine war during that time? The answer is no. The world has changed. The global financial system has shifted. And the old ways of investing just don't work anymore. It's time to adapt. Blindly holding on to financial stocks with the hope that they'll bounce back eventually only amplifies risk. If the U.S. continues aggressive debt policies, the risks to investors could grow even larger. Now is the time to reevaluate your portfolio, assess your exposure to U.S. assets, and consider alternatives like gold or foreign currencies. Buying financial stocks or long-term bonds is no longer the safe bet it once was.